So let's speak about the latest market movements that we saw happening today. We've got Gary Booysen from Rand Swiss who joins us now. Gary, let's start with the overall markets, the performance that we saw today. The JSE really in the red. I mean, what can we attribute to this major sell-off that we saw today?
So you're very deep in the red today. So we've got your all-share index down over 2%. It really was led low. I want to say led lower by the resource index, which is down more than 3%. But the financial index also ended over 3%. And the only, so I suppose, glimmer of hope we saw was in the industrial index. And that was really only being held up by Naspers, which rose around 1% after Bob van Dijk and the team announced the deal earlier in the week to try and narrow the discount with a bit of financial engineering. So it really was broad-based selling. And I think the best explanation is probably the very, very hawkish comments that we've had out of central banks over the last few days. Jerome Powell, really just pouring cold water on any sort of equity market rally yesterday, speaking at the ECB forum, and that kind of risk-off attitude filtering into our markets today.
No, absolutely. But he also said something else about the level of knowledge of himself and his team, the Federal Reserve, when it comes to inflation, didn't he, Gary? I thought that was quite comical. I never thought I would have to laugh in a markets-related story. Markets are never that funny.
I suppose we laughed because we're trying not to cry looking at what's happening in financial markets currently. So, yes, so Jerome Powell obviously came out and said, I think we now understand better how little we understand about inflation. And when you hear one of the most powerful central bankers in the world, one of the most important central banks in the world, whose pretty much entire job is to understand inflation, admit something like that, it's very, very scary. Now, there wasn't actually any really new messaging coming out of the speeches, but I think it just I suppose highlights the fact that the inflation that we're seeing in the US CPI, for example, sitting at 8.6%, with interest rates nowhere near that. That's a deeply negative real interest rate that you're generating in the US at the moment. And either we have to see interest rates rising aggressively, well, I don't see we have any other choice, but or we have to see a real stagnation in growth and real pain in the labor market to kind of see the GDP contraction that's going to be required to get that inflation under control. So I think we're in a very, very tough spot. And I think markets are looking at this and saying, well, it's definitely not transitory, but it's a little bit worrying when you hear that coming from the central banker.
Absolutely. What's also quite worrying and what's also in a tight spot, Gary, is the local unit. The Rand falling quite significantly over the 2 days. And I'm wondering if that's got a direct correlation with those announcements about being plunged into stage 6 blackouts, or if it's got anything to do with dollar strength.
I think it's a little bit of both. So with the hawkish comments from the Fed, there's, I think, an expectation that we are going to see very aggressive interest rate hikes, which in financial markets, that's called the carry trade, when you can suddenly get a better interest rate on US dollar deposits. There's a natural flow from more risky emerging markets into the safe haven currencies like the dollar. So a little bit probably will be dollar strength in the risk-off situation that we're in currently. But there's no question, looking at load shedding announcements in the past, there's a correlation between load shedding and local rand weakness. And when we had the rumors come out that there was going to be level 6, we actually published a note to clients saying, just be careful. It looks like there could be a currency movement. That was around 1580. We currently, we hit lows today, or highs, depending which way around you look at the pair, of 1646 to the dollar. So a significant move over the last couple of hours.
Yeah, absolutely. Let's talk about commodities now, with a specific focus on Brent crude, down about 1.2% today. Should we be smiling, or is this just some volatility and we'll see a bit of a seesaw happening with the price of Brent?
Oh, well, I'll take any good news we can find on the markets today. So OPEC came out and they're sticking to their output strategy at the moment. And I think that's to an extent, settled nerves around the oil markets. But as you say, oil and specifically the Brent crude contracts are incredibly volatile at the moment. So, taking one day's price movement is probably not the smartest way to go about it. We are seeing, if you look at the sanctions leveled against Russia at the moment, we are seeing the patterns of trade changing. So imports from China increasing, but we're also seeing European economies and European governments hitting back at that, trying to almost stifle control the flow of Russian oil by putting in administrative barriers around the insurance on transporting oil, for example. We did see a big drawdown in U.S. crude inventories as well. So that a big drawdown like that might prompt an actual price rise, just saying that there's potentially more demand. But I think that number was made to look a little bit better just because of the drawdown we've seen in strategic petroleum reserves as well.
Yeah, thank you very much, Gary. As always, I did want to discuss Exxaro, which highlighted two important elements in its update today. The fact that the dysfunction at Transnet is really having an impact on its transportation of coal. And of course, it is Eskom's biggest coal provider. But I suppose we can catch up on that another time. That is Gary Booysen from Rand Swiss joining us to wrap up the markets day. That was quite comical in some aspects, actually.